Hey, I'm Jordan from MiningStockMonkey.com, and after nearly 2 decades of investing in this sector, these are what I consider 9 of the very best gold companies. So let's say I like the outlook for gold and I want to invest in some gold stocks. A few options I have would be to buy an ETF, but buying an ETF, you're paying a management fee to own a bunch of crappy companies mixed in with the good companies. So if you don't want to own the crappy companies, well then you could buy a managed mutual fund, but then you're paying 2% a year for that. Or I could split my money evenly between these 9 companies and create my own ETF with no fee whatsoever that consists of only great companies. The first company on my list is Agnico Eagle Mine. So this company has a really long track record of being a great operator in tier 1 jurisdictions, and they have tier 1 assets. So they operate in Canada, in Finland, in Australia. So that's one big appeal to a lot of investors, because a lot of the companies with tier 1 assets have them in places like the Congo, for example. Agnico Eagle also has a long history of paying dividends, and they've even paid dividends through the deepest of the bear markets, which is unheard of for a gold producer. After a few mergers and acquisitions, they've quickly grown to become the 3rd largest gold mining company in the world. And like most of the companies on this list, they have a very strong balance sheet. But with each company on this list, I'm not only going to give you the perks of that company or the good things about it, but also the risks. One of the risks is that although they have done a great job keeping costs under control, costs have been going up, but also because they have such a great track record and have awesome mines in tier 1 jurisdictions, the company is not cheap. And as always, you should know that the sector comes with a lot of risk, and you should always do your own research before investing. The next great gold mining company is B2 Gold. They also have a long track record of operating very well and also doing what they say they're going to do. Not only what they tell investors they're going to do, but also what they tell the host countries that they're going to do. They've been good corporate citizens, and that has allowed them to continue operating in what are often difficult to operate places like Mali, for example. They're also one of the best dividend payers in the industry, and they have a very strong balance sheet. One big risk with this company is that a significant portion of their production comes from Mali, which is not the most stable political jurisdiction. The next great company is Barrick Gold. This is the 2nd largest gold producer in the world, but they also have significant exposure to copper as well. So the CEO of Barrick, Mark Bristow, is arguably the best CEO in the industry. He took over Barrick a few years back after a merger between Barrick and Randgold before he was running Randgold. Barrick probably has the best tier 1 assets of any producer, and also the very best development pipeline. And in addition to that, they have a strong balance sheet. So what are the risks with Barrick? Well, one is that a lot of their assets are in pretty unstable jurisdictions. Number 2, their costs have gone up a lot. In the last 5 years, their all-in sustaining cost to produce 1 ounce of gold has gone from about $800 an ounce to about $1,300 an ounce. So usually having great assets allows you to keep costs reasonably low, but their costs have gone up a lot, so that's a big concern. Hey, if you're liking this video, could you please hit that like button and subscribe to the channel, because it lets YouTube know that you want to see more videos like this one. The next company is Pan American Silver. So although it has silver in the name, most of their revenue comes from gold. I think it's something like 80%. So they have proven to be a really good operator. And the guy behind this company is Ross Beatty, who's one of the most successful mining entrepreneurs in the world, and he still owns a significant stake in the company. So it's always nice to have that really smart, successful guy who's still involved in the company like that. And something great about Pan American Silver is the stock price has really gotten beat up recently. But in addition to that, it has a couple big potential catalysts that could really rocket the stock price. They have a big mine in Guatemala and another big silver mine in Argentina. And with both of them, they're trying to work with the government to get the go-ahead for those mines. And if either one of those gets into production, it's going to double their silver production. So what are the risks with Pan American Silver? Well, a lot of their operations are in Mexico and Peru, which haven't been the most friendly mining jurisdictions recently. Next is Osisko Gold Royalties. Because they're a royalty company, they have very low costs and huge margins, and they're also the owner of what's arguably the world's best gold royalty. And based on the sum of the parts, they're probably the cheapest mid-tier royalty or streaming company. So what are the risks with Osisko Gold Royalties? Well, number one is that they had a great CEO. And recently, he was ousted for no apparent reason. No reason given, just one day they let him go seek other employment opportunities. So that was really weird and a big concern. And secondly, they have $250 million in shares in development companies, in Osisko Mining and Osisko Development. And if you're going to invest in a royalty company, I don't know, for me, I don't want all that exposure to a development company. I'm buying the royalty company because it's safe and it's a great business model. So for those reasons, it's a little bit questionable, but it is cheap on the sum of the parts basis. The next great company is Franco-Nevada. This is the biggest of the gold royalty companies, and they have a really long history of super smart allocation of capital. They're very diversified. They have absurdly low operating costs and enormous margins. They have a rock solid balance sheet, and their great assets keep getting bigger. But what's the risk here? Well, because it's such a great company, it is not cheap. By the way, if you'd like to know what I'm personally doing with my own money, go to miningstockmonkey.com and sign up for my free newsletter. Next is Wheaton Precious Metals. I really love this company. It's the biggest of the streaming companies. Now, they're not as diversified as Franco-Nevada, for example, but they still have a lot of diversification, really smart management who have a long history of making lots of good capital allocation decisions. So you really love to see that. And over time, the share price is just like that, going up pretty steadily because their revenues keep growing, their profits keep growing, and they keep reinvesting that money very intelligently. In addition to that, they have a rock solid balance sheet, and also they have super high and very predictable margins and cash flow. So what's the risk here? Well, like Franco-Nevada, it's not cheap. Next is Royal Gold. Similar to the last two, this is one of the big three royalty and streaming companies. They have great assets, they have great management, they have a long history of a really strong performing stock that just goes like that over time. They also have really low costs and good assets that just keep growing. But what's the risk here? Well, like the others, it's just not cheap. These are really high quality companies and investors know that, so investors are willing to pay a little bit of a premium to get a top quality company. By the way, before I get to the last one on this list, there's a lot of smaller companies that I really like as well. However, to make it on this list, it had to have a market cap of at least $1 billion. But let me know in the comments if you would like to see a video like this, but with smaller companies. Next is Sandstorm Gold, which is probably my favorite of the mid-tier royalty companies. They have bought a lot of good assets over time that year after year, they keep replacing everything that's been mined. So despite getting revenue every year, their attributable gold ounces that are still in the ground keep growing. So that's always great to see. They have really low costs, great margins because they're a royalty company. And something else I really like about Sandstorm is they have a great development pipeline. So what are the risks for Sandstorm? Well, the CEO, he's made a lot of good decisions over the history of the company, buying great assets. However, not too long ago, he did something that a lot of investors didn't like for good reason. He was buying back stock with the company's earnings, and then he ended up issuing stock at a lower price. So that wasn't good. And also, after a big acquisition recently, the company has quite a bit of debt. Now, personally, I'm not too concerned about this. I think they're going to be able to pay it down without a big risk to the company, but that is a risk. Next, watch this video to learn why the gold and silver royalty companies make for such great investments.